Once again, good evening to everyone. All right. Okay, we see a lot of people coming in. Okay, let's just give 1 minute for more people to come in. All right. Okay. Right. Okay. Right. Okay, just very good evening, everybody. Thank you for joining our webinar, which is our market outlook commentary today. So I'm Ethan from InvestingNote, right? So before we go into this webinar, right, I'd like to show you guys that some key updates that I have for the SG Active Trading Tournament, right? So of course, for the people who have first time seeing this page, do note that this is actually the region's most exciting and prestigious trading tournament where we're giving away up to 10,000 worth of prizes. All right. So let's take a look at the bottom, right? This is actually the leaderboard, right? Let's take a look at the leaderboard, man. So rank number 1 is Mr. Ko Shi Hua, right? His total returns is 163%, right? So if you click on any of these top 10 people's portfolio, right, you can actually see what they have traded so far. All right. So for those people who also didn't know that this tournament is actually open only to trading specifically daily leverage certificates, aka your DLCs. So if you go to his profile, you can actually see what are the open positions that he have and also his summary positions as well. Of course, right now he done 2 trades. Let's look at other people who have done more trades as well. Okay, so Mr. Assad here has jumped 143 in ranking to become number 2 on the spot, right? Now let's take a look what he traded. Okay, so you're given 100,000 virtual capital, right, to actually trade as well. Okay, for him, he did a galaxy shot as well. Let's take a look at other traders. Okay, Mr. Own Goals. Let's take a look at what they traded. He's currently at 67.4%. And yep, he has quite a few trades here. Traded his open positions, Ali Health, Galaxy Entertainment, Petro China, and Sense, right? So these are his orders that he have traded and locked in the position of 67.4% total returns. All right. So do go to the our website, the tournament website. If you don't have the link, just take out your mobile phones and do a quick scan of this QR code on the right. All right. So of course we are giving away for registering alone, we are giving 2-day 1-night stay at Marina Bay Sands, right? There's 1 lucky winner for that, and there are also 2 lucky winners for just registering, right? You get an AirPods Pro, right? So if you join the competition and have yet to place any trades, right, do just make any 3 trades. Buy and sell buy is considered 1, sell is considered 1. So any 3 trades, you will be eligible for a lucky draw of an iWatch Series 6 watch. Okay, so do scan the link and visit our tournament page down here. All right, it's pretty exciting. Right now we have garnered close to 3,000 participants, right? So I'll see you at the tournament. So let's get back down into the market commentary, right? So of course today we have 2 special guest speakers, right? Then to the InvestingNote community members, he's no stranger, right? He's very active on our platform and he's a trading rep from Phillip Capital, and of course he has close to I think 20 years of experience, right? Then in this business.
Yes. Hello, hi everyone.
So yeah, so then you can say hi.
Hi everyone, good evening.
Yep. So next of all, we have Mr. Marcus Ng, who is actually the Vice President at Societe Generale. So Marcus is previously from SGX, and right now he is in charge of handling the daily leverage certificates in Singapore. Marcus,
hi everyone.
Say hi. Okay, cool. So this is how the commentary will go. So Dan will take up probably close to 35 minutes to 40 minutes of the webinar to give you guys, audiences, outlook of the market, right? Then after that, we'll have Marcus show us how leverage can be done using DLCs. Then after that, we'll open Q&A to the floor. All right. Without further ado, then I pass the mic to you. Maybe you share your screen from your side.
Hey, thanks, Ethan. Give me a minute. Okay. Okay. Can you all see my screen?
Yep.
Yeah.
Good.
Okay. That's good.
You can click present. Yep. Awesome.
Okay. Good evening, everyone. Thanks for tuning in. I hope you all have your dinner already. It's 7 p.m. Okay. So today I'm going to share some of market outlook, and I hope they can value add to you, and hopefully you have some good takeaways. Okay. So without further ado, let's start. Okay, US market, Wall Streets. Okay, so I think for those who have been following the US market, most would have known that actually US market have a very good 2021 for most part of the year. Okay, so almost every now and then we will see record highs from Dow Jones, from S&P, from Nasdaq. But it's only until recently, right, in September, where we start to see some pullback. Okay, but this time around, the pullback is a bit different from the previous pullback. Okay, this time around, the pullback is slightly longer. Okay, as you can see from the chart of this S&P, this Dow Jones, and this Nasdaq, it's slightly longer than the previous pullback. And basically, what is causing this pullback is mainly inflation concern. Okay, for inflation, right, what happened is that market has been moving up because of good earning seasons where a lot of company has been coming out from this pandemic year 2020. So Q on Q, year on year, they have been doing very well. Okay, and that helped to prop up the market. Okay, of course, Biden's infrastructure bills and his new policies are also helping the market. Okay, but it have come to a point whereby inflation will really start to creep in. Okay, of course, together with inflation worry, there is also a rise in Delta variant cases. Okay, so what happened is that recent data, excluding yesterday's data, has been pointing to a recovery market, and therefore there's a concern for inflation. Okay, this Jerome Powell has already hint to the market at this Jackson Hole symposium that is very likely that tapering will be started in the almost at the end of the year lah. Okay, so September, which is next week, they are going to have a meeting. I don't think they will act first, but they will mention they'll give some hint on the timeline of this tapering as well. Okay, yesterday's job data take actually quite a good take a bit off the pressure for Fed to act up, because yesterday the inflation, the job data was better than expected. It's not as, it haven't prompted this Fed to act as quickly. So next week's Fed meeting, we will very likely to see if we will see a clearer timeline to when the Fed will start to do this tapering. Okay. Okay. Then moving on to Singapore, right? Singapore, the headline for Singapore is actually quite different from US. Okay. For US, right? A lot of people are talking about tapering, inflation worry. Okay. But in Singapore, right, our focus are actually on these reopening of economies. Okay. Okay, what happened is that for COVID cases, right, if you guys remember, back in April and May, okay, we are actually moving out of phase 2. Okay, there was a talks of reopening the economy at that point in time, but the spike in cases has resulted in the government moving the Singapore back into a P2HA, okay, phase 2 heightened alert. Okay, they have tightened some of the restriction, and since then we have been in we have been taking a very cautious approach and this economy reopening theme has been put on hold. Okay, it's only until recently, right, where the Singapore government, these are multi-ministry task force, has came out and said that we are moving more to a COVID resilient economy. Okay, so in a COVID resilient economy, what they are trying to say is that we are going to have we are going to live with this COVID-19 in the same space. Okay, so the focus, instead of depending on the number of cases, okay, they will focus more on the number of cases in ICU or number of cases with serious illnesses and even death. Okay, which is why even though recently there is a spike in all these COVID cases from I think 100 plus to about 800 over, we will still see the Singapore government is still not tightening the economy. Okay, they are still letting everything as status quo. In fact, they are looking to slowly opening up. Okay, they will only revert back to tightening only if the cases in ICU and cases in those with serious illnesses and death rise. Okay, apart from that, right, I think we will be moving more into reopening theme. Okay, then okay, the other headline that we have seen in Singapore market is only recently announced, that is SPACs. Okay, to give some context, right, actually SPACs is what we know as special purpose acquisition companies. Okay, so essentially it's actually a bank check company that is going to be listed on the exchange. Okay, they are being sponsored by a group of investors. Okay, and there is a guideline for them, okay, to merge with an existing business in about 24 to 36 month time frame. Okay, and basically, I think this SPACs framework is actually good for SGX, good for the investors, and I think good for the aspiring company as well. First of all, as we all know, SGX has been suffering from low liquidity, and they have a tag of being a very boring exchange. Okay, but with these specs, right, just like what they have done in 2017, where they introduced DLCs, okay, they have been trying to bring back vibrancy to our local market. Okay, and for these specs, right, whenever when there's a listing of these specs, okay, investor will have more choice to choose from, more option to invest on. Okay, not only our usual DPS, capital land, as such. So we have more choice for the company, and under these new spec listing, right? Okay, there are some guidelines. Okay, and this guideline I think is more of to safeguard the investors also lah, because in the first place, things to take note for specs listing is that number one, you need to do some research on who is the sponsor, whether they are credible or not, and of course the valuation. Okay, the valuation of spec. How are we going to value a specs based on an empty shelf? Okay, so these are the things that investors need to really look at. Okay, and I think just yesterday, there was this news that Temasek Fund, okay, Temasek is actually looking to invest in Singapore's company and some of the mid caps in regional as well. Okay, and I think this state investment fund, 65 equity partners, they have a fund of at least 1 billion. Okay, so there are two ways where these according to this report, there are two ways where this Temasek fund can really invest in our market. Okay, firstly, they can directly invest into some already listed company like capital infrastructure or capital REIT, okay, they can also invest in SPACs as well, okay, which means that they can actually use the city-states new framework for these SPACs, okay, to encourage more listings. Okay, that is, they come up with these SPACs, and hopefully within 24 to 36 months, they are able to onboard with a tech company or other private companies to merge and get listed. Okay, for this aspiring company, right, it's actually good because in this case, right, they won't have to go through all the normal listing procedures, and they also save costs on all the marketing, the road shows, and I'm sure they also save some on the underwriting as well, lah. Okay, so in a way, I think it is actually quite a good initiative for SGX, and so in this case, right, SGX, I think as a company is worth looking at, lah. Okay, so for this Hong Kong and China market, right, I think there is recently there is quite a big hoo-ha. I think most of us have heard of these common prosperity policy that is that China is currently embarking on. Okay, so basically, when did this all started? Okay, I guess it all started. I mean, we won't know when they started, but it came to light actually more to the end of June when DD Global was listed in US. So what happened to DD Global was that after 2 days, right, Chinese regulatory actually came out and suspend some of the new accounts, some of the app that is in all the mobile phone. Okay, from there onwards, right, we have heard a lot of these regulatory crackdown from Chinese techs all the way to education, to financial services, to even entertainment. Okay, so through this crackdown, right, we have seen quite a huge impact on the market. Okay, actually, for people who are having these Chinese techs, right, like Alibaba, Tencent, okay, we have seen them dropping from a very, very high ground. I think Alibaba is trading like $150 over today, and I think Tencent is about 450 over. Yeah, so what happened is that for these common prosperity drive, right, they have led to a lot of China crackdown. Okay, in name, right, what happened was that this Chinese government has been ongoing is that they want to reduce the income inequality of the rich and the poor. Okay, and because of this, right, a lot of Chinese government, a lot of Chinese entrepreneur has been affected by it. Okay, and they have led to a lot of companies having to so-called relent to these Chinese government. Okay, in fact, recently, right, I think Tencent, Alibaba, Pinduoduo, Meituan, and Xiaomi have all pledged certain initiative to these China's common prosperity drive. Okay, and whether this common prosperity drive is good or not, it actually really depends on how you look at it. Okay, different people have different perspective, and of course, different angle to look at it, lah. Okay, well, I think that to reduce the income gap between the rich and the poor is a good initiative, but I think the way that the Chinese government is going about it, and whether it's right, and if it's right, whether the magnitude of it is appropriate or not. Okay, so what happened was that for this crackdown, a lot of people was thinking that the market view in the way that it is actually a bit harsh, okay, and it's a bit sudden. So in a way has been discouraging a lot of entrepreneurship, okay, and so in this case, I think we would have to see how it goes lah. Okay, so what happened now is that this Chinese tech at this pricing, what should we do about it? Okay, shall we be going in, looking at it, or whether it is a time to really pick up or what? Okay, but actually it really depends. Okay, so what I feel is that now we are looking more into these political factors that is affecting these Chinese tech rather than business factor. In fact, if I remember correctly, I read from a lot of US new social media, right, that actually business-wise, companies like Tencent, Alibaba, they're actually doing quite okay, okay? But the only thing is that when they came out with all these reports, they did not take into account the political factors. Yes, so with this in mind, I would say that most of the factors affecting this Chinese tech is mostly political, okay? Anyway, there is a difference between investing and trading. So for investors, right, who has been looking at this Chinese tech, okay, I think you may need to have a higher risk tolerance, okay, to really go into it, because actually it is already very low, okay. And for those trading, right, for those traders, okay, for traders, actually volatility is the key lah, okay. So for traders, I think that you may want to look at all these Chinese stocks to see whether there is some trading pockets of trading opportunity within these Chinese stocks, this short period of time. Because what happened is that there are news that these Chinese stocks is, I mean, business-wise, they are doing quite okay. It's just that we don't know when all this cram down will subside. Yes. So so now I think in this case, right, it's a bit too low to look at lah. So there may be some rebound in time. Yeah. Okay. Recently, I think there is also another news that I think we read it in the news yesterday, is about this China Evergrande. Okay, so there is this news that they may be in the risk of being in a default. Okay, so they have been downgraded by a lot of rating agencies, and there are a very big hoo-ha on their solvencies. Okay, and I think this one is a very big issue, because we have to note that Evergrande also have a lot of credit loans from a lot of Chinese banks. Okay, among them Chinese Construction Bank, China Construction Bank, China Minsheng, okay, Bank of China, okay, and of course their supplier also take loans from the bank. Okay, so this is, I think, this China Evergrande is actually quite a big concern when it comes to this Hong Kong market. Okay, so if they were to go down, okay, I think their supplier will likely to default as well, and all the banks that is exposed to all these property companies may be at risk as well. Yes, so this is a big concern, and investors in Hong Kong and China may want to take note lah. Okay, so the spillover effect on these Chinese bank is something of a very big concern. Yeah. Yep. So that would conclude my part on this market outlook. Over to you, Ethan.
All right. So guys, please put in the questions if you have any. All right. Okay, maybe just a question for Dan. So, personally, what do you think of, some of these tech giants in the near term, at least, for the sake of the competition,
Okay.
right?
Okay, basically what we are seeing is that Alibaba, Tencent, okay, they are trading range. Okay, for Alibaba, for example, the trading range for Alibaba has been about 150 over to $190. Okay, so if you are trading on the DLC of this Alibaba, right, actually there is quite a big price range for Singapore investors, for DLC traders to really look at. Okay, whether it's long or short. Okay, I think for DLC trading, right, I think it is strive on volatility. Okay, I mean, a company can be very good, but if they don't move, no matter which DLC you buy, or even if you buy the mother share, okay, it's very unlikely that you will make money, right? So for trading wise, I think we for all these Chinese tech in the near term, some of the Chinese tech company that you can, or rather, the majority of you can look at is Tencent, Alibaba, and Xiaomi, based on the price volatility. Yes.
Right. Okay. So there's one question, right? So by Mr. or Miss Leong, right? Leong Lai Shan, right? What are views on the REITs that have exposure on the China property?
Sorry again?
What are your views on REITs that have exposure to China property?
Oh, okay. At this point in time, if you are referring to Singapore REITs that is exposed to China property, right? So far, they are not so much in danger, because not forgetting that REITs, we do have this regulation of not more than 50% reverse ratio. Okay, so in this sense, the Singapore REITs that's investing in Chinese company are so-called protected in a way lah. Okay, and also REITs, they are not property developers. Okay, so they are mainly on renters. Okay, so unless there is there is some changes to the property environment, like the rental environment, maybe for example COVID-19, a protest, just like during the Hong Kong protest time. Okay, barring these unforeseen circumstances, right? I think those REIT they are investing in, they are exposed to Chinese property are still okay in Singapore terms.
Okay, thank you, Dan. Okay,
Right.
there's another question by Mr. Anonymous. It's asking, how about the Singapore banks? Everybody's favorite.
Okay. The Singapore banks. Okay, actually, Singapore banks, right? What happened is that, well, we all know that they are stable, they are good, they are strong. Okay, but based on the recent price trend, right, we have seen that when they have been moving up in recent weeks or even recent months, right, the magnitude is very, very small. Okay, I mean, earlier of the year, we are seeing like, DBS $20 to $21, $21 to $23 kind of thing. But in recent weeks, we are only seeing like $30 to $30.50, $30.50 to maybe $31.20. So it seems like all the upside, the uptake magnitude is getting very, very small and very, very, very labored. Okay. And I mean, in terms of investor psychology, for those who have been buying at $17, $20, $21, $24, I'm sure they are looking to sell at any hint of uncertainty. Okay, so in a way, I would say that for these Singapore banks, if you are looking at long term to collect dividend, well, it's still a good proposition, but to me personally, I think it's a bit on the high side lah. I think some pullback is expected.
Yeah, I think DBS is actually at the all-time high, 30 plus. It's been hovering. So are we expecting like a correction sometime soon?
I won't say so much as a correction, but I think a pullback is based on price action, a pullback is quite likely lah, because pre-pandemic, okay, the support is $24. Okay, during the pandemic, the support is $17. Okay, now we are at $30 over. which, as you mentioned, is almost, record high already. I mean, the record is about $32, $33, if I'm not wrong.
Yeah.
Yeah. So
Around
if you
there,
take, if you take the XT or whatever, adjusted it, you should be about $31, $32. So now at $30 over dollars, I think for the short term, right, it's a bit on the high side. So a pullback, I think, is quite likely now.
Okay, thanks, Dan. All right.
No problem.
So, okay. So, guys, keep your questions coming in, right? Right now, we're going to introduce Marcus, who is from SocGen, to actually give us a run through on how we can, leverage on DLCs to actually catch, small minute movements, like be it DBS or, other related stocks. Marcus, the time is yours.
Hey, thanks, Dan. Thanks, Ethan. Can you hear me, right, Ethan?
Yeah, can.
Okay,
sure.
Hi, everyone. So my name is Marcus. I'm here today, happily to share with you guys, I would say also one of the hottest products in the region, the daily leverage certificates, DLCs. So this product is launched 4 years ago on SGX. Societe Generale, the bank I'm working for, is the product issuer for these DLCs. This product was listed on SGX 4 years ago. Started off with just 10 DLCs, but now we're at over 220 DLCs available for investors to choose to trade on. So today I will be sharing with you just a very quick introduction about these products, and then I'll try and highlight a few of the DLCs that relate to the underlying that Dan was speaking about, the DBS, the Tencent, etc. Okay, so let me just quickly share my screen. So Ethan, you can see my screen, right?
Yep, all good.
So this is the our website, dlc.socgen.com. So you can go to here for all the resources that you will need to trade DLCs. And then also Ethan mentioned there is this tournament now, right, which is featuring the DLCs. So what better way than to practice, to learn about the DLCs in a simulated environment, so you don't have to risk your own hard-earned money yet until you sort of are familiar with the product, and then you move on to real trading. So the DLCs, what are DLCs? DLCs is a structured product issued by usually an investment bank like ourselves. So Societe Generale is the issuer for the DLCs, and it is listed on SGX securities market, which means that you can buy and sell it like a stock, in a sense, through your regular stock brokerage account. You can find it on your POEMS account. You can find it on your UBKN, U-Trade account. All the retail brokers will offer the DLCs as well. So you can find these DLCs on your regular stock brokerage account. Okay, and just on the touch of brokers, so there are a few broker promotions that are going on during this tournament campaign period. So do look out for it as well in the campaign page for the SG Active Trading Tournament. Okay, so the DLCs in a nutshell is a structured product listed on SGX, and every day Societe Generale, we are the issuer as well as the market maker. We will be there to provide bid and offer codes on the DLCs for investors to trade. So the DLCs, they track a specific underlying asset. You can either track index like your MSCI Singapore or your Hang Seng Index or your Hang Seng China Enterprises Index, or you can track your single stocks like your Alibaba, your DBS stocks. So right now we offer both a Singapore shelf as well as a Hong Kong shelf. So you can trade the DLCs on most of the STI constituents as well as most of the HSI constituent stocks. Okay, and each DLC comes with both long and short DLC. So if you want to take a leverage position on the DLCs and you're in a long, you're bullish on the underlying asset, whether you're bullish on DBS or Hang Seng Index, you will buy the long DLC. Okay, if you are bearish on it, then you will buy the short DLC. Okay, so there's the word leverage inside this product itself, DLC. So I think I guess it's straightforward. It's not too hard to understand that this is a leverage product. It's a short-term trading product that offers investors leverage, and also it's a very efficient tool for you to make a short-term trade, for example, rather than buying the underlying stock. So that it saves you a bit of the capital, because most of the DLCs are priced at about 20 cents to about $2, which is lower than the mother share stock price. So you are able to use less capital and gain a larger exposure to make a short-term trade. Okay, so over here is our website. Under the education page handbook, you will be able to see some description of what the DLCs are, and then you get in depth into what it does. So the DLCs comes in different kind of leverage levels, 3, 5, and 7 times. For the index DLCs, it's up to 7 times, but for the single stock DLCs, it is only at 5 times. Okay, naturally because stocks are a bit more volatile than the indices. And so these 5 times and 7 times, what does it mean? It means it is based on a close-to-close basis. The daily leverage certificates DLCs, a 5 times DLC will give you 5 times the performance of the underlying stock. So for example, if DBS stock moves up by 2% tomorrow from, today from yesterday's close, then the 5 times long DBS DLC will be up by 2% times 5, 10%. Similarly, the 5 times short DLC will be down by 10%. Okay, so if DBS instead drops by 2% tomorrow, then the 5 times short DBS DLC will be up by 10%, and then the long DLC will be down by 10%. So every day, it gives you that fixed 5 times or 7 times leverage performance on the daily performance of the underlying asset in terms of percentage. Okay, so this DLC is more linear in product versus your other kind of leverage instruments out there. It is more straightforward in terms of you are able to see that performance. Okay, if the underlying stock is up by 2%, my DBS DLC, long DLC should be up by 10%. And then you will see it in terms of our B&R's codes on the market. Okay, and I mentioned just now, every every underlying asset, there will be a long DLC and a short DLC for investors to either take a bullish position or a bearish position. So just please remember, if you are bullish on the underlying stock, you buy the long DLC. If you are bearish on the underlying stock, you buy the short DLC. Okay, please do not go about shorting the long DLC. Okay, we don't want you to end up in a buying market, a short sell position, and in the SGX buying market, and then it'll be very troublesome. So just make sure you know that you buy the long DLC or you buy the short DLC. You never short sell anything. Okay. And then over here, how do you read the DLC name? Every DLC has a stock code to it. This one is DANW. Okay, you can search DANW on your broker platform, and then this Tencent long DLC will pop up for you. Okay. And then this Tencent, in the name itself, you can see that Tencent is the underlying stock for this DLC. So this DLC tracks the Tencent share price movement, gives you that 5 times leverage performance, and in the long direction. So this is a long DLC. So if you're bearish, if you're bullish on the stock on Tencent, you will buy this DLC. The SG over here refers to the issuer, Societe Generale. Okay, and then the expiry date is 211105 in year month date format. So the DLCs have an average expiry of 1 to 3 years. So it's a long dated expiry, and unlike your say other like option type product or structured warrants, etc., this product does not have time decay. Okay, it every day will just give you that 5 times performance. So even though you hold it to expiry, up to the end of the day or the day before the expiry itself, if the DLC price is at $1, you will be cash settled that $1 on expiry date itself. So this is just it. The expiry date does not matter in terms of the pricing of the product. Okay, please feel free to drop any questions that you have on the DLC as I go through in the Q&A, and then we'll have some time later to address it. Okay. Okay, then just a bit of the product comparison. If you are interested in short-term trading, you're looking at leverage products, but there are a few out there for you to choose from. So why should you sort of look at DLC? So I just want to give you a bit of a pros and cons here to have a look at. So for versus CFDs, I think this is a OTC leverage product. So DLCs are listed on SGX securities market, whereas CFDs are an OTC product. Okay, so with it comes a certain amount of transparency, being a listed product, and as well as maybe 1 or 2 things I wanted to share with you is the DLCs versus CFDs itself allows you to give you a bit more of a, if you are a very active trader in and out throughout the day, for the DLCs, you might want to consider the DLCs because in terms of commission wise, the DLCs are able to offer you cheaper commissions in a sense of, let me explain. If you want to buy, say, get exposure to $10,000 worth of DBS stock, right? You go into the CFD platform and then you put in the margin, and then you get exposure to $10,000. You put in $2,000 margin, you get 5 times leverage, and then you get the $10,000 exposure. But then the commissions of the 0.1 or 0.2% is charged on the $10,000 worth of exposure that you have. Okay. Whereas for DLCs itself, you could go into SGX, your brokerage account, and then you put in $2,000 to buy the 5 times long DBS DLC. You get up to 5 times leverage and get $10,000 worth of exposure to DBS stock itself. But the commissions wise is based on the $2,000. It's not based on the $10,000. So that's 5 times cheaper in terms of commissions. So if you are a very active trader, it is definitely worth looking at DLCs versus your CFDs. One of the cons of the DLC versus the CFDs, I've got to be a bit fair here, okay? So I cannot tell you everything that's rosy about the DLCs. The DLCs have a compounding effect feature, which I will touch on very shortly. So that's something that is different from the CFDs, which you need to be very aware of. The compounding effect can work for you or against you. So this is something that all the DLC traders have to be familiar with, and I hope that the simulation tournament itself will also help you to be able to understand that better. Okay, versus other kind of like structured leverage products out there, versus structured warrants. Like I said, the DLCs are not option type products. Okay, every day you get that 5 times performance. There is no in the money, out the money. There is no time decay. There is no implied volatility. So definitely, I think the DLCs are small. They do not have that impact of optionality, and I think you don't have to worry about the time decay portion or to calculate the the Texos model, etc., to be able to see the value of your DLCs. Okay. I will skip on a bit. You can refer to our website to have a bit more of a color on the different products available for you to gain leverage and how does DLC compare to it. I'll skip right to compounding effect. So compounding effect is something that is unique to our product DLCs. Okay, this compounding effect, like I said, can work for you or against you. If you trade the DLCs intraday, you buy it in the morning and sell in the afternoon, then there is no such thing as compounding effect for you because you are an intraday trader. You hold it within a day, you get that 5 times performance. But if you hold the DLC for more than a day, 3 days, 5 days, a week, 2 weeks, the compounding effect gets stronger. Okay, so you need to take note of that in terms of the compounding. In a very ideal scenario, the compounding effect works well in a trending market. So when you come to trade the DLCs, it is good to have a bit of conviction in terms of the trend that you're looking at on the underlying stock. If you have conviction that it is in upward trending or downward trending market, etc., you can consider the DLCs to be able to enhance the compounding effect. Why do I say that first? So in a very simple example over here, the Hang Seng Index moves up by 2%, 2%, and 2% over the course of 3 days, right? Every day. And then it's up by 6% on day 3. And then the 5 times DLC, HSI DLC, is up by 10%, 10%, and 10%, correct? Every day it gets you that 5 times performance. But then at the end of the day, you're up by 33.2%. That's more than the 30 times, more than the 5 times performance. 5 times 6 is 30, right? So it's more than the 30% that you think you would have gotten. That's because of the compounding effect. Every day your gains are locked in. And then that 10% is based on a higher base over here every day. So you can normally, so that's why you get that enhanced performance. It is more than 5 times leverage in a positive compounding market. Okay. Similarly, in a downtrending market, you will see that even after 3 days of consecutive -2%, the Hang Seng Index is down by -5.88%. Whereas the 5 times daily long DLC, you lose money on it because you got the direction wrong, but you lose less than 30%, less than 5 times of this. Okay, this is also because of the compounding effect. So these two are examples of positive compounding in the sense that it works for you. But where it works against you for compounding effect is in a volatile market where it's up and down, up and down, up and down. So over here you see the Hang Seng Index is down by 3%, down by 4%, then up, then recovers to where it was. I mean, to up to by 9%, recovered to 1.5% overall return over the last 3 days. But now you see that the DLC instead, is not in a positive territory. It is down by -1.2%. That's again because of the compounding effect. Every day, the losses and the gains are locked in. Okay, so compounding effect can work for you or against you. So it's important to have a bit of a clarity on the trend that when you're trading the DLCs. It is ideal for intraday trading, it's ideal for swing trading, and also maybe ideal for hedging some of your positions, but all in a short-term trading horizon. Okay. So I'll just quickly go into some of the DLCs. Sorry, I just wanted to just touch a bit on the airbag mechanism. So this is another important feature of our product for the airbag mechanism. Every DLC has an airbag mechanism built into the product, and then at different levels of leverage and also depending on the underlying, there is a certain set airbag trigger level. For single stocks, it's either always plus or minus 15% for the 5 times single stocks. For the 7 times index DLCs, it is at plus minus 10%. Okay, you can refer to here for the trigger level. What happens is that if the underlying stock, makes a very adverse movement, it is down by 15%. Okay, then your long DLC itself, the airbag will be triggered, and then we will suspend the DLC for 30 minutes to cool down, and then we'll do an intraday reset of the leverage factor. Okay, this is to reduce the actual exposure of the DLCs. And if the underlying falls further, your losses, the rate of your loss is also mitigated in that sense. Okay, so the airbag mechanism is really meant to be triggered only in extreme market movements, and not to be something that is happens every day for the DLC. So it's something to keep in the back of your mind, but it should not affect your DLC trading on a daily basis too much. Okay, we'll look at some of the rest of the website. So if you go to under products, you can go to search. Under search, how to find a DLC, you go under search. Over here on our website, you can look for the underlying stock itself. Okay, and then you can see that we have over 220 DLCs over here. You can go different pages, but you can easily search it using the underlying stock, and then you can see the type as well as the leverage factor. Okay, you can also use our advanced search, button if you want to, look at certain DLCs with a higher sensitivity to the underlying stock or a certain spread percentage for those who are more sophisticated traders. Okay, so you can see over here, these are nicely laid out. All the DLC today, Petrol China was one of the highest traded value, and Meituan long DLCs as well. So let me jump into the Meituan one, just to highlight a few points. So you can see over here, the 5 times long Meituan DLC DMGW. Okay, Meituan was down by minus 4.5% today. So you can see that the DLC itself was down by minus 22%. So that's where the 5 times performance comes from, right? So because it's down by 4.5%, the Meituan long DLC is also down by about 20%. Okay, and every day, the 5 times performance is based on this very important number here, the last intrinsic close. Okay, so for some of the DLCs, they might not be so actively traded. The last traded price of SGX could be at like say 11 a.m. or like 2 p.m. But the underlying stock is still moving, right? It's still trading in the exchange. It's still trading all the way until like 4 p.m. for Hong Kong stocks or 5 p.m. for Singapore stocks. So the DLC movement still moves as well. And so this last intrinsic close is meant to capture in the actual movement of the underlying stock all the way to the market close of the underlying stock. Well, even though that the last traded price might be a bit stale. And also this last intrinsic close is where the 5 times performance is derived from. So tomorrow, if Meituan is up by 5%, for example, then you get the 25% gain, right, on the DLC DMGW. The 25% is based on this last intrinsic close, okay, and not the SGX last traded price. So there's a lot of information here on our website that is useful for DLC traders. You can see over here a back monitoring mechanism for you as well. And then you can see all the terms of the DLCs over here. You can even download the historical performance of the DLCs to have a look. Okay, so very important, please do have a tour around these pages for the DLCs that you're interested in. So the 5 times short Meituan, similarly because Meituan was down by 4.5%, the Meituan short DLC gained 23.6% over here. Okay, so this is where the 5 times performance comes in over here. And I mentioned a bit of compounding effect just now. So an example would be CD development, DLC, DQIW, 5 times long CD development DLCs. So I think we know that CD development had a bit of a rally, this week because of the whole sincere sell stick kind of story. So over the last 4 trading days, we actually managed to see 5.85% gain in CD development. And then correspondingly, you also see that there is more than, there's about a 30% gain in CD development. Okay, so, but then just to point out, compounding effect can work against you in a sideways market. You see over here, CD development has been sideways. over the last 2 weeks, 2-3 weeks. So over if you had bought in early August, and then at this point now, CT development is only up by 2.9%. Okay, that's 3%, right? But then times 5 is 15%. But then the CT development DLC 5 times long is less than 15% gain. That's because of the compounding effect. Okay, so need to take note of the compounding effect when you hold, for a longer period than for a longer period of time. Of course, again, I strongly urge everyone, when you trade the DLCs, please do not hold it for months and please do not hold it all the way down to like 6 months or a year. It is very likely that the compounding effect would erode your returns, because markets, in the long term, they do gravitate back to the mean. They do not go always up, always down. They always come back down in the longer term. So the compounding effect will be more exaggerated in terms of a longer term horizon. And some of the DLCs that Dan mentioned, some of the underlyings that he said that he's looking at. So we do have very nice chart features as well on our website. If you go to any of the products, so if you go here, any of the products, if you click the underlying price here, it will point you to the stock price chart, which is we just recently enhanced for you to be able to play around, with the charts, and all the information, all the data is real time. But unfortunately, none of the data license providers will ever will give you live streaming sort of license. So this one is you got to click the button here, refresh. Click the button refresh, and you get the live price of the underlying stock as well. On the product term page as well, you can click on the refresh button. So this is a chart for you to look at, and then you can see relatively below the DLCs available for you to choose from. I would recommend that you look at the star ones, because these are the more sensitive ones. Okay, so look at the star ones to be able to choose your DLCs wisely as well. And in this range here, I guess we were talking, Dan was talking a bit about the tight range that Alibaba could be in. This could be the range that he's talking about, between 154 to 172. So, it's a decent range to trade, I guess, between the support here and the resistance here. So you could use the DLCs to, do some sort of like range trading over here between the two levels of support and resistance. Okay, you can also see Tencent over here as well. They seem to exhibit the same kind of similar charts. Could be ideal for range trading in this period of time. And lastly, the DBS DLC. So I think everyone of us is familiar with the DBS DLC with DBS. So you can use the DBS 5 times short DLC DCAW. Dan mentioned a bit about the pullback. Whether you want to trade the pullback in terms of shorting it, you can consider the DCAW, DBS DLC. Okay, you can see here DBS was down by close to 1% today, and then the DCAW DBS short DLC was up by 5+% over here. Okay, and then if you are waiting for the pullback to long some more, you can always consider the long DLC instead. I would go here, the chart, have a look at the chart, and then I would look at the long DLC, look for the star one, and I'll look at this, and then I'll search for the stock code on my stock brokerage account. Okay, I think I've tried to cover as much as I can within a short period of time. Sorry for going too fast, but I hope I can give you a tour of the website so that you can just explore as you trade the DLCs. The website would be very helpful for you. But one very important thing that I need to mention is this very upfront number up here. Our DLC hotline 6226-2828. Okay, this is the number that you can reach me and my colleagues at. If you require any help, any questions, any feedback on the DLCs, call this number, and then we'll be sure to pick up your call to be able to help you with anything that you need. Okay, and I think that's about all. Please explore the website itself. There are a lot of tools for you. There's a simulator, there's a price matrix, but I don't have time to go into all this. Please do still play around, and I hope that this has intrigued you a bit in terms of the DLCs, what kind of leverage it provides, and hope it's not too complicated as well, because the idea of the DLCs is really something that is for a simple and efficient instrument for investors to gain leverage to make a short-term trade if they want to. Okay, so that's all for me.
All right.
Thanks, Ethan.
All right, thanks, Marcus. That was very comprehensive presentation on DLCs. So guys, don't leave yet because we are saving the best for last, right? Dan over here, has some stock ideas to actually share with you. Dan, please.
Hey, thanks, Ethan. Okay, actually, Marcus have give a very comprehensive information on this DLC, and he mentioned about range. Okay, since it's in conjunction with this DLC trading tournament, right? I thought I'll just share some of these stocks that you may want to look at that have quite a good range to trade. Okay, one of them is actually Tencent. So if you take a look at, I'm sorry, can you all see my chart?
Yep.
Yeah, can see, right? Okay, so as you can see, right, for Tencent, right, there is actually quite a huge range for DLC traders to really look at. Okay, so we are talking about 528 to 426 around there, plus minus. Okay, so the range here is actually quite big. Okay, so assuming that the projected trajectory of this stock is as such, right? We are actually having a very good range for DLC traders to actually look at. Okay, so be whether you are bearish or bullish, okay, the range is there for you. Okay, and as just now Marcus has mentioned, right? If you are trading intraday, you won't have the compounding effect. Okay, but if you are trading like more than 1 day or 2 day, right, you will actually see the compounding effect. And I think the range here, cope with the compounding effect, will give the investors or DLC traders a bigger edge lah. That's what I think here. Okay, then the other one that investors may want to look at is JD.com. JD.com. Sorry, I think it's 2618, right?
Let me do a quick check.
JD
9618. Yeah.
9618. Okay, 9618. Okay, similarly, right, for JD, there's actually quite a big range for these investors to look at, okay, all the way from here to here. Okay, so we are talking about 240 to about 320. So that's about $60. Okay, a $60 range. So out of these, assuming that it's 300, right, 60 over 300, we are talking about close to 20%. So if you have DLC, right, if you're trading a DLC, there is a potentially a very big gain for the DLC investors in this tournament. Yeah, so this is another counter that can take a look at. Okay, of course, if you ask me personally, right, I think the trajectory could be either rebounding from these 20 MA, or maybe if they break this again, we could be seeing somewhere along here. Okay. Why here? Here is because of this historical price support. Okay, so these are the range that the investor could potentially be looking at. Okay, and finally, there's another counter that you guys may want to look at. I think Marcus has covered it just now. Is city development. Okay, so the latest news on city development was that they have already sold away their rather divest their CCL group, the loss-making company. They have caused their share price to drop so much over the past 1 month. Okay, then once the news came out, right, we have actually seen quite a huge, a very big green bar here. Okay, so now we are in a more on a consolidation stage. Okay, but do take note that they have already broken the previous high, the near-term high. Okay, the near-term about 7.03 here. Yeah, so if this support holds, right, actually we could be seeing a very huge swing all the way from this to this, to all the way up to here. We could be swinging here. Okay, but before that, we will be seeing here as well. Okay, but even if the support don't drop, right, if you're bearish about it, if you think that it's bearish, there is equally a very big range for DLC traders to be trading at. Okay, so these three counter I think is very good for DLC consideration, whether you are longing or shorting. Yeah, because the range is there. As I mentioned earlier, right? For short-term trading and more for DLC, we are looking at the volatility, okay, of the price range, the volatility of the price range instead of the fundamental. Okay, because DLC, as Marcus has mentioned, is not meant to hold for long term. Okay, it's more for short term. It's a short-term instrument. Yeah. So I hope these three stock idea would help you guys to do well in the DLC tournaments. That's all. Yep.
All right, thanks Dan for this three wonderful stock ideas, because right now, of course, the market has been like a ride for most investors and traders, right? So once again, guys, I would like you guys, for those of you guys who have not signed up for the tournament, the link is in the chat box. I put it there. Simple click, register, and you're good to go tomorrow. So the tournament hours actually, we follow the real trading hours, right? For Singapore listed underlyings, that means the DLCs that follow the SGX listed stocks, they open at 9 o'clock sharp, right? And for those that are Hong Kong listed, they open at 9:30, right? So do check out the link, sign up. And if you have not tried trading DLCs, this is the perfect opportunity for you guys to. You know why? Because there's absolutely no risk. And we are giving out a lot of prizes, right? So if you make just 3 trades during this tournament, you can get a chance to win the Apple iWatch Series 6. Of course, we don't have the Series 7 yet because it just released yesterday, but we are giving out Series 6, right? Worth $500, right? And if you just register, we're giving a 2-day, 1-night MBS free staycation for you and your loved ones. All right. And apart from that, we're also giving out daily $60 CapitaLand vouchers for the people who has the biggest realized profit on a single trade. All right. So far, it has been quite a heated tournament competition right now, because the previous number one ranking, his portfolio was, I can't remember, about 50%. Right now, the number one guy is 120 something percent already. So, do check it out. Place a trade come 9 o'clock tomorrow morning. All right. So, guys, we'll be happy to take some last Q&A questions if you have any. Okay, maybe James, right? So James, what James is asking, what is your advice for long-term investors in Xiaomi? Okay, just to get the record straight, right? Xiaomi also has a DLC as well, right? Both long and short, right? So then, do you have any opinions on Xiaomi?
Sorry, Xiaomi, right? Yeah. Okay. For Xiaomi, right? Actually, Xiaomi, if I remember correctly, I read something about they going into these EV sectors as well. Okay, so if that is true, I think if you are talking about long term, right, I think it's one counter that you can actually look at, okay. However, there is of course there are some speed bump ahead. Okay, that is the China and India the geopolitical relationship there, okay? Because what happened is that Xiaomi have a very big market in India, okay? So hopefully, if that can be resolved, I think Xiaomi will be even better, lah. But I think the EV is the main theme that Xiaomi investors are looking at. Yes.
Thanks, Dan, for sharing. I think talking about EV, yeah.
My advice for long-term Xiaomi investors is to actively hedge your position with DLCs. It could be a volatile ride. Yeah. All right.
Thanks for sharing. So for the people who have just heard the term, not familiar with the term hedging, right? It means that you probably want to go against the opposite direction with a certain percentage of DLCs leverage. All right. So another thing talking about EVs, right? The interesting thing is, I think there's also one EV that is listed in Hong Kong, which is BYD. That has a DLC as well. So BYD is an interesting company, and I know just the other day I saw some BYD cars in Singapore. Right.
So
Yeah, it's
BYD,
pretty cool.
Geely, on EV space is actually quite one of the most popular underlyings that's been traded on our DLC space. So I think there are some very strong swings in their share prices for BYD and Geely. And I think that makes it an ideal environment for people looking to trade the DLCs. So yeah, we do see a lot of activity on the BYD and Geely DLCs, not just now, but it's been like that for the last 2 years.
Yeah, awesome. So okay, we are a bit ahead of time. Once again, I thank everybody for attending our market outlook commentary, and of course, thank you to two special guests, Dan and Marcus. Right, thank you for spending the time with us and sharing the ideas and how DLC works as well. So guys, once again, do click the link in the chat button, register. I'll see you tomorrow at 9 a.m. Do the trading. All right. See you guys.
Thanks, Ethan. Thanks, Dan. Thanks, everyone.
Thank
Thank you.
you. Thanks, everyone.
All right. See ya.
Bye-bye.
Bye.